Hi there, traders, and welcome to Trade the Structure. Now, what I'm going to show you is a little strategy I've been working on for a while. I've been trying to make it nice and easy and simple for anyone to put in place. Okay, we've talked about it before on some sort of level. We've talked about the 3 candle setup. Now, I've been expanding on that, and I've been trying to put in rules in place, a few different layers, just to make it a lot more simple for your trading. Okay, it's something that anyone can put in place. I believe it's something that new traders can easily understand and can easily put in place to try to get them on the right side of the market and in the high probability setup areas. Okay, sometimes it's very hard to get in because you got this feeling like it's not going to keep going up. And like today, the market will just keep going up and up and up. And if the rules say that's where you should be, that's what you should do, then that's really what you should do. Okay, so if you stick with the rules, I think it'll get you a nice high probability setup and it'll get your gains consistent. Okay, so what I'll do now is just go through the basic rules, and then we'll talk about what sort of layers I've added to it, and we'll just show you a few examples. All right, so to start with, this is the Hang Seng. It doesn't really matter what. We've got examples on the Hang Seng. We've got the Nikkei and the Australian 200, which we'll take a look at, and just take a look at sometimes when you're looking for it to work, and sometimes when you wouldn't implement it, okay, and when it actually can keep you out of trouble. All right, so the strategy, the 3 candle strategy, if you haven't seen the video, check it out. It's on our tradethestructure.com. Take a look at the website. It should be on there. If not, take a look at the YouTube channel, all right, and just go back on that and just review that, okay? So it may give you a bit more information, might cover a bit more. So what I'm looking at for the 3 candle setup, you can see here, okay, 3 candle setup, pull back to the MAs. So you're trying to be biased up when the MAs are up. I've got a 10 and a 20 EMA, and I'm on the 1 minute chart here, so I'm using the 1 and the 5. It's more of a scalping strategy, an intraday trading strategy, but I haven't really reviewed it, but I'm assuming that it could work quite well also on the bigger time frames. It's just the way to get you in when you've got confirmation. All right, so 3 candle setup, pull back to the EMAs, exponential moving averages. All right, with the EMAs, so you want to be buying above and you want to be selling when the EMAs are down. Okay, so we've got the 10 below the 50 for the sell, the 10 above the 50 for buys. So you're looking for that pullback to the EMAs. Okay, you want to find the low candle on the pullback. So for example, if you're looking at this candle here, that's the low candle there. And what you're trying to do is count 2 candles back, okay, for the entry. Now, in this case, I don't really like that. And one of the sort of rules I've been putting in place is not trading like an outside candle where you can see it's flush the low and flush the high in one candle. What I ideally want is something like this when it's made low, 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 low. Okay, these high of the candles are getting lower, okay? And then you're choosing that low. So this candle makes the low on the red candle, and the very next candle, it shoots up. And so you from that candle making the low, you're taking that high and the second candle back high. So basically, the box I've got marked up is where you're entering a break at the top, a break on the top side. You're going to buy, and your stop ideally should be below the break of the bottom side, if that makes sense. So your stop should be up here to enter, and your stop should be up here or below there to get out, okay, if you're wrong. So ideally, what I like to do if I'm looking at the Hang Seng, I like to use a 40-point stop loss. And so I ideally want that to be within the 40 points. And you can see here, I think it's around 39 to 40 points. So look, it didn't come under any pressure anyway. It did pull back, and then you've got another setup and another setup. The first setup didn't come under pressure, the second setup didn't, and the third setup didn't also, okay? But with this setup here, I tend to steer clear of those outside candles, okay? Those sort of expansionary candles, I tend to steer clear of that. I tend to think they're there to sucker in some traders, and I've never really seen it work out too well for me. If I'm desperate to get in, I'll be taking the sort of the 3 candle back high, if that makes sense. I'll be looking at maybe something like this, all right? Even since it's so close to the high, I'll probably be taking something like that. Now, you would have got in there, maybe you wouldn't have got in there, but either way, I tend to steer clear of that. I tend to like the candles where it's low, 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 consecutive lows, not something that's made a low and within the same candle is taking out the high. Okay, I tend to steer clear of that, like I said. So if you go along, you've got same sort of thing. Okay, that candle's making the low, you're with the MAs, you pull back to the MAs. This candle is an expansionary candle. It's taken out that high, one of the low candle, and the very next candle back is taken out that high. So your entry is on the break of that candle there, the break of the high of that candle. You can see you got stopped into the trade, and your risk is just below the box there. Okay, so when you box it up, you know where your entry is and where your risk is. Okay, same with this one here. You've got the market expanded higher. We've got a pullback to the MAs. We're sticking with our rules there. We've got the low is put in place. So when that candle closes, you tend to look at the break of that one and the next candle up, in the line or in the series back. Okay, barring a candle that's like an expansionary candle that's got taken out the low and the high. All right, so that one worked out really well, and you can see what it does. Even though you're under a bit of pressure here, it's worked out quite well. You didn't get stopped out there. You were in profit for a while. It turned around, and then you actually got a secondary candle, so you can actually have added there. Look, if you got out here for whatever reason, you've got another entry there. You've got another entry there, and you can see, up here. Look, that was a candle setup. You've got that there. It's got the high there. It pulls back 2 consecutive candles and then it basically takes off. After that, that is the low. You're looking for the break there. It does eventually break it there, but I think it needs to do it within the next few candles. Okay, you want something like this when it breaks and then keeps going higher. You don't want all this chop. That tends to be a different setup, or you just kind of negates that entry there. All right, so you can see that was for the upside. Now when we go across to the right hand side a bit, we can see some nice entries on the downsides for the sell side. So you've got the MA starting to cross. You didn't really want one here because you've still got the 10 above the 20 EMA. But what you've got, the market's pushed down. It's popped back up to the MAs. So we've got the green candle here, which has taken the high. It's probably better doing that. This candle here, which is the actual high. All right, then you 2 candles back, which is this red one here. That's made the high. A break of that low outside the bottom of the box is your entry stop, and then your exit stop just above that box. Now it came up and I think it made the exact high. So whether or not you had a really close stop, or you might give it 1 or 2 points above that, depending on whether you're staying in or staying, you get stopped out. But either way, that is an entry there anyway. So you can see it's come back up. You've had a little push down, pop back up. You're still with the MAs. This candle makes the high. 2 candles back, 1, 2, trade through the low, which is this candle box here at the bottom of the box. Okay, your stop is above, and then it heads south. Now, if you look at the measure, just those stops there, sort of the trade, 27 points. If I had my stop at 40 points, I'm somewhere up here. I would have stayed in on the first one, and the second one was pretty much the same. You had a 25-point stop essentially, so maybe a 30-point stop on that one. All right, so you can see you've got the same sort of setups here. Pull back, that candle, actually the red candle makes the high, the very candle back, the next candle back, you're counting 2. So you've made that high, you've come down. So the next candle, this one here, has to take out that low and the previous low, so 2 candles back. All right, takes that out, stops above, and it continues on down. Okay, so that's ideal setup. That's what I'm looking for, and I'm trying to look with the the MAs. We've got a 1-minute chart, like I said. You're sticking with the MAs up, and you're trying to stick with the MAs down, EMAs down. Now that was the basics of it. Okay, you can look at that, and you can just trade it from the 1-minute chart. If you want to add a bit of complexity to it, because I know with the Hang Seng, it can chop around quite a bit, and it has chopped around a lot lately. If you start to look at the 5-minute chart for a bit more confluence, all right? So bear that in mind. We're with the 1-minute biases, okay? Now, if you're looking at the 5-minute as an extra layer of bias, what that can do is, and I found lately a lot, that when the market, the 5-minute EMAs are down, the market's going up, and then the 1-minute's up, and then you get the 1-minute turning over and the 5-minute rocking up. So to me, that's kind of a definition of a range-bound market. It's an uncertain market. It's not a trending market. Okay, so I tend to be looking at the 5 minutes EMAs, same 10, 20, and I've got a 50. I think this one might be a 50 or it might be 100. It's 100, so either way, it doesn't really matter. I think the other chart was just a 10 and a 20. All right, so we go back to this 5-minute chart here. So you've got 5-minute EMAs are down. All right, so I'm trying to stick with the 5-minute EMAs as well. All right, so if we look at that, and we've got this period here, of which I've boxed up in blue, the 5-minute EMAs you can see are starting to roll back up again. Now they do sort of roll up, roll down, and roll back up. So we're focusing in on this level. All right, and if we go to a 1-minute chart, we'll just tick across here. Now that's when the 5-minute chart, the 5-minute charts EMAs were down, and that's when they were up. And you can see if we were looking to go stick with the rule of 5 EMAs down, we want to be biased down, and we want to get when the 1-minute EMAs are down, then we didn't get short here at all. The market's pushing higher, pushing higher, pushing higher. Then it rockets down. Okay, so when you start to get the EMAs crossing the 1-minute, and you know that the 5-minute is biased down as well, so you've got the 2 charts in your favor, you can start looking for your shorts. Okay, your pullbacks. Now I did take this one, and I didn't really like it. I got out somewhere down here for a small gain, and it was lucky because it actually did rocket back up. So you can see it can get choppy, but if you're trying to stick with your rules, like this one, if you stuck with your rules there, you took the short through that low, and you had your stop at above, okay, you got stopped out, and it wasn't too big a stop, I don't think. I think it was a 56-point stop. So that's why I didn't really want to risk that too much, and I was happy just to get out there. Now, either way, that was the rule. This one didn't really play out, and you've got the EMAs on the 5 down. They start to roll back up, or you've got the 1-minute starting to roll back up. So with a quick note on this one here, when the market heads down, you've got, let's just draw that up. You can see when it presses down quite a bit. Now that moved down from that high to that low, 155 points. It's kind of hard to take a short. I mean, I did take that, and that's why I was a bit edgy. It went through the lows, and I was a bit edgy that it's going to retrace. The actual underlying market was up as well, so I'm looking at a few different things. But if you try to steer clear of something that expands too far to the down, so what you ideally want it to do is take out this low potentially, and then bounce back up. Okay, so if we can take out that low and then bounce back up, then you've sort of got a nice little short on your hands, and you're looking at pushing into that low. But when you're down on the lows and it sort of bounces back up, it makes it a bit tougher. Okay, especially after 155 point move down. That's quite a big expansion with no pullback. Right. So in essence, what was happening there? The market was starting to turn into a range-bound market. It flushed the lows. You can see up here, it flushed this high, reverted down, flushed the lows, reversed back up. Okay, so that there, although it was set up with the 5-minute EMAs and it's set up with the 1-minute EMAs, it didn't really work out. Now, I managed to pull out a profit, probably more luck and experience than anything else. But if you're sticking to your rules, that would have been a small, probably a 40 point. If you're just using a 40 point stop, would have been a 40 point loss there. Okay, so walking along, if we go into this section now, we're looking at a 1-minute chart still. This is when the 5-minute EMA started to be biased up. So if we just start to look at areas where we could potentially get in, you've got this pullback to the EMAs. Yes, that could have been a little goer there, but only because you're above the EMAs, you haven't really got the 10 above the 50. Okay, so the 10 above the 20, but it is starting to bounce back up again. You've got the low put in place here. You've got another low put in place here. So if you're looking at the markets pressed above the EMAs here, you've got the low put in place. So 2 candles back, it's actually about there. Look, that started to work out anyway. It broke through the high and continued to grind its way up, right, before we rolled over and we went back up again. Now here, same sort of scenario. So this is more highlighting the market it was a tough going yesterday and it was more of choppy action. But if you're trying to stick with your rules, ideally it was probably in about here. Okay, that was something that actually did, it's a very, very small risk there. If you took that trade there, that was the low put in place, 2 candles back, you got in. Okay, it did work out. You would have spiked up straight back down and you had a couple of chances to get out of that one. Okay, this one here, same sort of trade there. You see it break up through the top side. It did go there. The market was going to close. I think it closed about here. So whether you took that just before the hour break or not was a different story, but that one actually did work out eventually. I guess you got stopped out a lot later on here, but you could have closed out before the close and you would have made a few points there. So you can see that what it's doing is trying to keep you on the right side of the action with the 5 EMAs when they're pointing up and the 1 EMAs when they're starting to point up as well. You're trying to keep on the right side of the action there, okay? And another little thing that you're looking for, if you're trading from that 1-minute chart, if that was your trade there, for example, what I like seeing is the MACD. Okay, the MACD is pointing down on the 1. You've got this little pop back up. The MACD is still running down, and you've got your setup when you've got your pullback to the EMAs, and it heads south again. Okay, so that could have been something you could have got into. At that time, the 5 EMAs were sort of whipping around. They were pretty much flattening out, and you could see that with the 100 EMA through here. It's great. It's pretty much flat. So what you're looking is the market swinging from one side to the other. So it's kind of making it hard. If that grey or the 100 EMA is down, then that makes more sense. If it's up, it doesn't really make too much sense, okay? So there's just a few intricacies, but we've got the rules in place. Now let's go and look at the Nikkei. So this was the Nikkei for today. Yep. So this here is just showing you that the Nikkei was actually back in here. Nikkei, the EMAs are pointing up, okay? So we've got them pushing higher. So we know we're on the right side with the 5-minute chart. The longer term EMA start, it's on a slow rise and it's starting to steepen. Okay, you can see in hindsight it did steepen a lot more, and you got the 10 pressing higher and the 20 pressing higher. Okay, so everything from the 5-minute is in your favor. Now, if we go and look to the 1-minute, I'll just put that in the 1-minute chart there. You can see these were the setups. Okay, and as that this was a tough gig today because the markets. I would not have expected that from the Nikkei. It actually opened up about 400 points on the index and rallied another 400 points. But if we're sticking to our rules and we're wondering which way to go, whether we to go long or go short, you're sticking with those rules. It's putting you in the right place. Now, like I said, sometimes it works, sometimes it doesn't work. Generally, you're in a higher probability setup if you're sticking with the 5 and the 1 minute EMA. So yeah, like I said, sometimes it doesn't work, but I would expect you around the 65 to 75% strike rate on that trade. It's just how much gains you can whip out. If it's a whippy market, you might have a small gain. If it's a good market, trendy market, you might have been able to hold that. You might be able to add to it like you've got on the Nikkei here. You could have added to that, built a good position, and pushed all the way up into this resistance zone there. Okay, so if we just go and look through the first setup, we know that the 5 minute EMAs are starting to press higher. This setup here, you've got MACD's going up, nice little setup in the MACD. MACD's rising. That's your first pullback. That's your setup candle, that green candle there. It trades into the low, 1, 2. So that candle actually is the high you're taking into account as well. It's not an expansionary candle. It's not the candle that we were talking about in the Hang Seng, where it's actually taking out the low and then it takes out the high in that same candle. It actually stops, okay? And you can see, even if you want to add a little bit of safety to it, I guess you can take the very next candle back as well. It's only a few points higher. It actually breaks that. Your stop is below. And if we look at that stop there, just want to know how much that is. That's about 35 points. I'm using 40, 45 point stop on the Nikkei, and that worked out quite nicely. Even if you had to sit through this setup was another setup here, pushed back down, took it out, got you in, a red candle after it, still got you in, didn't take out the stop and went higher. Then you got another add here, and you could have added it here. Okay, so this made the low, 2 candles back. You're taking out the stop about here. You entered, and your stop is just below the box there. Okay, so if you're boxing it up, you can see how it's going to work, and you can see when you pull back the EMAs, sometimes it takes a while to kick on. Like this one here, you can see it did pop up there, it come back. It was a bit uncertain for a while. Then the more it got pressured higher, the more biased the market started to trend higher. It started to move higher, and that's when the 5 minute was really starting to power higher as well. So you can see those nice little setups really played out nicely. So let's take a look at the SPY and see what that's got for us. Okay, so you've got the 5 minute chart here. I think it opened about here on this candle here. Let's just draw that up. So this green candle here, you've got the 5 minute is biased down. Okay, so we're kind of looking up until, if we just try to box that up, probably up until, what was that, about 10 past 11. So we've got a good hour and 20 minutes, nearly an hour and a half of action there where the actual 5 minute was biased down. Now I can assume that there's no setup in this move up, probably no setup in that move up, but maybe there's a setup off the 1 minute EMAs in that section there. So let's just go and look at that now. Actually, let's just go and let's just do it here. So that's kind of the zone. Let's go to the 1 minute. Okay, so you can see, yeah, it was a choppier price action on the SPY here. Now you've got that was kind of the zone. This is kind of the high we're looking at now. Although that is a kind of a technical pattern there, you've got a double top there, you've got an RTF failure, you've got a lower high coming to play there. That was a good setup in its own right. But if we're talking about going with the EMAs, that was your 2 candles that made the high. Basically, this green candle here, your next would have been, if we just look at that, we'll box it up there, would have been that red candle right in there, if you can see that. Okay, that red candle there, that low, it broke down through there. But the problem is you weren't with the EMAs. The 10 EMA was still above the 20 EMA. You're seeing some flattening out in the 100. So although it did play out, it didn't really set up as well as you'd want it to set up, okay? And you got this action down here, it got a bit messy, and that comes into the realm of what we were talking about on the Hang Seng, where you got that expansionary candle. So even though this candle made the high, in the same candle it took out the low. So it's not really in there what you want to trade off. Potentially, I mean, even if that candle there, that took out the high, it basically traded into the high and then went flush straight back down again. It's not really the kind of setup, okay? And you can see that the market had already expanded. What's that? That's about 10 points, actually, about 10 points or so. So it already expanded a bit. It's not a trade that I would have taken in here. And up here, yeah, although I was saying that was another price action trade, we said RTF with a shoulder, that worked out okay. And if we just, a bit of drawing up there you go, that worked out okay. It wasn't the setup we're looking for. So you can see sometimes it will work. The SPY is a lot harder. I think the SPY gets a bit messier for my liking. I like something with a lot more volume and a lot more volatility, which is the Nikkei and the Hang Seng. And you look at the Dow as well, go and look at the DAX as well. They're the kind of the indices where I think this kind of setup or this kind of strategy works a lot better, because you've got a lot more liquidity going through. The market will move up and down a lot more, and the price action is a lot cleaner, whereas the SPY can be kind of messy. It can sit around and do nothing for a while and then could dive, take a nosedive, or it can just spike up as well. Okay, so it makes it a bit tougher. I feel that these are the kind of price action setups you're looking for a lot more. All right, so if we go along, potentially in here, if we go and look at, go back to the 5 minute, let's just see what that was showing us there. Yeah, not really in here either. The 10 theoretically just on the end there is actually above. If we go and look at that just there to see what it looked like, the 10 is above. Essentially, you potentially could have said that's flat. Not, the 10 and the 20 are roughly even. The market's flattening out there. If we go and look at what that said on the, it will just take, actually, we'll take all that section there and just see how that started. Okay, in here, we'll go and look for something that might match up to the strategy there. Now you've got this price action chopping around here. You know the EMA's pretty much flat to running over. I'm expecting them to run lower just by looking at this price action. But for the 1 minute, if you're staying out of this area here, that's great. Now we've got this kind of zone in here, which the 1 minutes now start to play out. Okay, the 5 minutes starting to roll over on the downside. You've got the 5 minute really early stages of that move down in your favor, and then you've got the 1 minute starting to play out in your favor as well. So if we just start to try to mark up where we could potentially get in, this is the candle that made the high. You're really taking the low of this break here. Potentially, if we just mark that up there, let's get a yellow. Oops, there we go. That's where you would take it. Now, I wouldn't take that because it's too much action in between. I'd be looking for potentially this one here. You've got it coming back into the high. So just if you say that's right back to the high, we've got a candle, candle, candle. I'll be looking at potentially, I'd take any one of those, and for safety's sake, I'd be taking those 3 candles, maybe a short in there. Okay, you could have taken that short. It did go down and come all the way back. So you've kept yourself out of trouble by having to stop above. You still kept out of trouble. Now, if you're looking at this pullback here to the MAs, and you can see how sometimes, the market takes a while to get going. But if you're trying to just stick with your rules there, that's your entry. Your stop's above. You kept out of trouble here. If that's your stop there and your entry here, yeah, potentially that's quite wide. Let's just see what point value that was there. 5 points. Now, if you're using a 10-point stop, you're fine. Your stop's bucket above here anyway. So, you could have taken the break of that low. You could have taken the break here and just earlier, a trade through here. And then a trade there. You might have added there. You might have added again with your stop above this zone through here because that's a 10-point stop. Okay, so we keep going. You can see in this area, the market pops up, made a high on this red candle. So that's your candle high. Anything that takes out 1 too low is basically at that same level. Okay, that's not exactly what I wanted. Let's just delete that. Make that a bit clearer. Let's use orange this time. So there's the third entry was really through there. Okay, so you can see your stop is above. Ideally, it's at the same level there. Stop above that box there, somewhere above here. You can either be moving those stops down, and you've got a third entry. Okay, so you got first entry is quite wide, but it worked out okay. Your second entry in here, which is actually the first entry really, was okay, and your third entry was okay as well. Okay, if that makes sense. And you can see that the market started to expand. So you've got the wind in your sails with the 5 minute chart. You've got the wind in your sails with the 1 minute chart, and you're really just trying to manage your risk on the way out again. Okay, if we start to look at it here, yeah, the market, it wasn't in your favor on the one, and you can see how, like I was saying before, it's not as clean on the SPY, but I'll be looking at more something like that. You've got the highs in place here, You could have traded off in here. We've got anything through there. You got making the high, 1, 2 candles back would have been an entry through there. Okay, it didn't really do anything. It still chopped around until you eventually got stopped out here. Then you start to look in this zone. Okay, we're looking for a deeper pullback. Okay, the MAs weren't really on your side, but if you're looking at it in here, you could have taken high candle, high candle, high candle, high candle. Potentially, if it was at this stage, when that candle made the high, you're looking for a break there. That eventually played out. Then when you got this second retest, it actually made a new high. Then you've probably got a tighter stop there. Okay, if that makes sense. So you can see that was your first entry off this candle high. This entry through here was really off that initial candle. Okay, if you were waiting for that one there. Either way, they were both within 5 or 6 points, small risk, and you got that expansionary phase down again. Okay, so hope that's making sense. I hope that made sense. Like I said, if you do have any questions at all, feel free to email me at tradethestructure@gmail.com. Okay, take a look at the website, www.tradethestructure.com. All right, and then I'll get straight back to you. If you've got any questions on this, just like I said, email me. And if you do like what you hear, it'd be great if you can leave us a like in the channel and subscribe to their YouTube channel if you haven't already. All right, guys, thank you very much, and we'll speak to you again soon.